Okay, welcome to the Weekly Roundup, April 28th, 2023. I'm Scott, that's Ben. Little different view for us this week. Normally we're at home in our home offices on the Friday, but I think we're ramping the downtown up even a little more now, eh?
Yes, we are. Yeah. We're gonna spend more time here.
Even more time.
Even more time.
Yeah,
Yes.
exactly. Do you want to mention why? You want to start off with that?
Sure, that'd be great.
Exciting.
We hired a new associate officially. She's here. She's watching today, and she'll join us soon on one of these calls. Renaud has joined our team officially today, so we're excited to have her on board and looking forward to introducing her to all of you. And so that's why we're down here. Today was our first day.
Exactly. Yeah, so we'll ease her in there and we won't pile on too much work right away, but it'll be a great addition to the team and it'll really help the customer service and response time and just tighten everything up. So that's great. We're super excited about that. All right, so let's start to get into what's going on in the week. Let's why don't we just start off by reading one of these headlines and you can kind of react to it. Because
Yeah,
it was, you kind of mentioned this in the Daily today, that First Republic most likely headed for FDIC receivership, sources say. Shares dropped 40%.
Yeah.
Been talking a lot about that this past week. I've noticed a lot in the Daily.
Yeah, so quite a bit. Obviously, we had originally we had Silicon Valley and others go bankrupt effectively, and then First Republic earlier this week they tried to go to their the big banks and effectively say, can you help us and inject some more money, either buy bonds or putting more deposits in, and it's been kind of straight downhill from then for First Republic. They touched $2.98 today, down from a high last summer of $171. So they're down 97% year to date. Look, it's been really continues to be a run on the banks. And if you look at that, the regional banks continue to struggle. They came out that they had lost, I think, somewhere in the neighborhood of 40% of their deposits. They were planning to cut 20 to 25% of their workforce, but the market essentially said that's not enough. And if you look at the big banks, they're losing deposits just as quickly as the regional banks are in the US. So this run kind of continues. Jim Bianco, some people follow, has called it kind of the bank walk, where money's kind of slowly dripping out of the system and buying T-bills and money market funds and things like that. And the more money that comes out of the system, it continues to be a challenge. And if you followed some of the YouTube shorts I've been putting out, I think yesterday I put out where M2, which is effectively all money in the system, has gone negative for the first time in 90 years. So, this is tight financial conditions, money's coming out of the system, and, it's continued to put pressure on what central banks do from here.
Right. Okay, what else are you noticing from this past week?
Well, today we saw a pretty good size move up in bonds, but we had a volatile week across the board. Big down day on Wednesday and rallied yesterday, and today was just a little bit better, but stocks and bonds rallied in turn today. Some of the comments from the central banks of the world seem to be leaning more towards most are going on pause and or cutting into the future. And so bonds rallied pretty hard with that news. And we're going through earnings season right now in the US as well. So earnings continue to be fairly weak for the most part, but we had Meta release some results this week, and the market like that, it was up 15% on their earnings. And we started looking at it around October, November last year as an opportunity to buy there. So it's been a good stock in portfolios.
And the public servant strike marches on. Pardon the pun.
Yeah, I mean, it seems to be right. It's the union, I guess, said they want this percentage increase, and work from home. Seems like neither have been able to come to the place where they're both comfortable with it. I've been obviously talked to some clients that are part of it and some friends and such, and I don't remember the longest ones, but somebody told me it was 91. I think they were on strike for 17 days, which was the longest strike ever. So, this one has the potential to last quite long as well, because it doesn't sound like either party want to move at this point.
Exactly.
Yeah.
Okay. So what do you got for us for the for Ben's charts this week?
Let's see here.
Two charts maximum today.
2 charts. I
No,
think
we
I
gotta
got 4.
We got to drive all the way home. Normally we just
Yes.
turn to shut it off. We got to factor in the commute time.
That's it.
All right.
Well, yeah, I mean, I think it's just most of the charts that I'm going to talk through today is really just a sense of where we are in the cycle. This is the kind of a look at senior loan officer on bank lending. And so I had a meeting today with the commercial banking team here at National Bank to, talk just about what's happening in the market, what's going on. One of the things that this chart really echoes is that we're continue to have tightening standards, and it's getting more and more difficult to extend credit at this point. And that's both overlaps on the commercial, but also on the residential and the consumer side. But tighter lending standards is really kind of the name of the day, which further echoes what I think is that we're in the early stages of a recession. And what happens next, I think, is the big question. So the last piece that we've been talking about for a while is just employment. This is employment data for the past 45 years, just to give you a sense of what happens and the timing of it. And so as we look at when does the recession start to kick in, this is a reasonable place to look at. We're starting to see an uptick here where unemployment's starting to rise. If we listen to most of the earning calls that we're hearing, most companies are reducing headcount, not increasing headcount at this point. And so this is the last of the kind of economic indicators that you would look at to say whether we're in, or at least in the early stage of recession or not. The other would be kind of core PCE, which the central banks look at, but this is the major one I think that you'd see in the news. So we're starting to tick up here. A couple of more. This is really just the health of the financial system. This is US specific. And so this is relative strength to the S&P and the banking sector. So of course, as we went through 2003, 4, 5, 6, 7, 8, the banking sector was quite healthy and strong as the economy was growing, housing was booming. Since then, we've seen a waterfall, and now we're touching new lows again here where the banks are underperforming, which tends to signify that the economy is not expanding quickly. So we'll continue to watch this ratio and see if it starts to tick up. And so the last two would be, the other major input, which has been inflation. Lots of questions continue to come around. It doesn't look like inflation slowing fast enough. Well, when we look at it through multiple scales, it does look like inflation slowing quite quickly. And while I know if you look at forecasts, they still say inflation 4.5 for the calendar year, it looks like that number is coming down a lot faster than that. And so growth and inflation continue to slow. So that really hasn't changed my view, is you want to have some bonds and gold and US dollar right now. And so nothing really has changed from a material perspective at this point. And this one caught my attention this week. Is really, there was someone that put out kind of the view of how has Buffett done versus some of the major indices over the last kind of 15, 20 years. And so I thought it was interesting just to have a look at it, because there's certainly worth looking at. And if we look at from we'll say 2008 to here, the yellow line on here would be the NASDAQ. So this would be kind of the techie growth sector. Since then, we'd have the orange line, which would be the S&P 500, which would be the orange line along here, and then the white would be Berkshire. And so if we look at those since 2008, obviously NASDAQ's outperformed by about 5% a year, 5.5% a year. Since then, even with the drawdown that we saw over the last 18 months, S&P's actually outperformed Berkshire through that period of time as well. And then you got Berkshire annualized at 13. So great returns still, but certainly when you're thinking about this over a longer time frame, it's worth considering where are we at right now we're going through a sideways move in both areas. And, I think it probably makes sense to have exposure to a number of these, but growth has certainly outperformed since 2008. And I think it's worth continuing to pay attention to.
Okay, great job. If anybody has any questions, now would be the time to ask, just down below in the Q&A button or in the text is fine. All right, so what's in the crystal ball? What's happening next week?
Well, I think hopefully we've gotten through tax for the most part. We've had a few last requests the last few days. We've been sending out tax packages. So if there is anything else, I know accountants have been coming back to you and asking questions here and there. So if that does come, certainly send it through to us. But otherwise, hopefully that is behind us, tax season for 2022. And then moving on into May, that we'll see where we go. But the central bank in the U.S. has a meeting coming up in May. Right now, it continues to look at like they're going to have their final rate increase. So we'd be watching that quite closely, see if there's follow through on the rally today. But it does appear generally that we're in this kind of sideways choppy period. And we'll continue to watch how that goes. But, good move in bonds today, and hopefully that continues through.
Yeah, great. Okay, no questions today. You want to anything you want to end off with? Or are we good?
I think we're good.
All right. Well, on that note, looks like a beautiful weekend. Everybody have a great weekend, and we'll see you next week.
Sounds good. Thanks. Take care, everybody.